Hey guys, welcome back. In today's video, we are talking about the greatest MOASS in history, the AMC restrictions, Gary Gensler resigning, and many more in this video. First, we're taking a look at this. Had they let AMC run in 2021 far beyond $72, maybe 300 to 500, kept it high for a generous period of time, allow AMC to sell shares to get out of debt, return the stock to $30 to $50, they could have things back to normal. But now the greatest MOASS in history is truly possible. And this is what we've been talking about in terms of understanding the longer they've kept this going, the bigger the MOASS will be. Because one of the biggest things for them to have kept this going on for so long is that they create synthetics every single day in order to manipulate and suppress the price of AMC. But what we have to realize is that the more synthetics that they create, the more synthetics they will have to buy back in the future. And so understanding all of that, that means what we get is the longer this goes on for, the bigger the squeeze will be. And that's exactly what we are seeing right now. And there's been many data that we've shown in the past before, which allows us to understand how many synthetics they've created, how much they're paying for these shares, how much they've spent on these synthetics, and of course, many more on that as well. And so we know that the greatest MOASS in history is truly possible because of all the data that we have seen in the past before. And one of the other indications that we can see is FTX was working really closely with Robinhood. Curious what the derivatives were, tokenized stock derivatives. So one of the things we knew was how FTX had their tokenized shares. And you can see how they contacted with Robinhood, as Robinhood said, they want to acquire derivatives. Now, the example that was given here was saying, say you tokenize stocks, instead of waiting 2 days to settle, you can swap Apple tokens, USD tokens on a blockchain. So one of the biggest problems that they had was, of course, with the days to settle, which back then was, of course, T+2. Now, this is what we talked about. The settlement failures was a massive problem in the past, and it still is right now. And what they wanted to, and now the example we're given here was Apple tokens, but what we really knew was that they wanted to talk about AMC and GME. One of the screenshots we talked about in the past was how AMC and GME took up largely of the margin requirements of the collaterals in Robinhood. And so we knew that it held a very, very impactful threat towards Robinhood. And so when they do talk about tokenizing stocks, it's very likely that they're talking about AMC and GME. But it's precisely understanding that there were cases like this, it shows us truly how big this situation is. And this is why I talk about why the greatest squeeze is possible. And like I said, there are many more other factors that are obviously involved, but this was one of them, and this was with one particular broker. If you even take a look at something else, you can see the trading restrictions for AMC Entertainment and GameStop Corp. And what we can see is Fidelity clearing 96% off market directed restrictions on AMC and GME. Like I said, every time, almost every single day now, as we go towards the future, we are seeing more and more things pop out for AMC. We're seeing more and more things pop out for GME. Now, to understand what a trading restriction is that warrants of counters in the trading restriction list are capped at $30,000 per counter and $90,000 per client. The ability to impose restrictions from time to time and without prior notice indicates it could happen at any time based on market conditions or other factors. So firstly, the trading restriction for AMC and GME already. Now, something that we've also seen in the past was obviously how these halts have came out for AMC, for GME. And recently you've seen this with DJT as well. We knew that if there was a stock that was heavily shorted, that was involved with short sellers that are extremely over leveraged, every time the price of these stocks going up, they would actually experience a halt. And this wasn't the price going up in the hundreds or thousands of percentages. This was stocks going up in maybe 10, maybe 20%, and it will instantly be faced with a halt. And this is to understand and to really highlight just truly how over leveraged these positions are. And so when we understand, the internalized, we've also talked about Citadel, how they internalize their shares, how they internalize the trades, allowing it to not actually hit the lit exchange, therefore not having a positive effect, not actually letting the buy volume hit the market. These are all things they've used and done in the past to suppress the price of AMC. Another thing, and it just makes things, again, extremely predictable right now. You can see Peter Hansey here Going to be a long day watching this, I suspect. Max pain is 450. So what we can see is the AMC price for the day, and you can see the thing that are coming in. Again, the suppression that is of course kicking in. Now, AMC closed at 448, and if you take a look at the max pain for AMC, you can see it's at 450. So once again, they've kept the price below the max pain. We talked about in the past before how this have effect on the short sellers, but it's becoming more and more obvious now in terms of understanding what max pain is doing towards these short sellers, but more so is understanding how these short sellers are still involved in this play. Countless times we are seeing people talk about how short sellers have covered, how short sellers are making hundreds of millions, if not billions of dollars from shorting AMC. But yet hundreds of times what we have seen is how every time we've seen something that is going to happen that will actually harm the short sellers, we see how they try and make sure that doesn't happen. So if they're making money, yet they're not wanting some stuff that could happen to harm these short sellers that could again cause billions of dollars in losses, you know, what is it that is actually indicating? It's showing that they are still involved in this play. And we've seen this with max pain countless amount of times. Now, another thing that I think is quite positive for AMC or in terms of the general market is SEC chairman Gary Gensler to resign. So you can see that our sources indicate he's set up to step down this month. But while it's certain that Gary Gensler will leave or be removed, the time remains unclear. We haven't been able to confirm this, and Gensler has not responded to our inquiries. So what we can see is understanding the fact that he is soon to leave SEC. Now, one of the biggest things to talk about was how Gary Gensler was allowing short sellers, was allowing institutions, allowing these bad actors to manipulate the retail market. It was said that he was obviously not out for the interest of the retail, but rather for the institutions. And we can see that from, of course, like the holds that we've talked about and stuff that they've done in the past. So with Gary Gensler to resign and with the point of a someone new who potentially, again, under Trump's administration could bring transparency, could bring fairness and equalness into the market, into the regulations, what we are seeing right now is the tough times for short to come for these short sellers. And that's exactly what we want. Like we already mentioned in this video, you can see what they're doing to manipulate AMC, to push the price down below max pain. We've talked about how, again, the internalized of shares. We've talked about the tokenized of stocks. And so these are all things that we've talked about in the past that should have already been penalized, but haven't been penalized. And now what we could see is the potential kind of bring light towards everything that has been done, that has been exploited and used against the retail investors in the past. Furthermore, you can also see this. The rats are working overtime. As of 2 a.m., they returned 600,000 GME shares and the lend pool fee is increasing, where we're seeing 2.9 million to 3.5 million. Now, one thing that I do want to mention is that as opposed to returning the shares, it could very likely be the creation of more shares. The shares that were once borrowed and used against GME have not been returned, but they created more shares to, of course, fill the pool for allowing more and more institutions to be able to locate shares and therefore short AMC. Because this is something that we have seen in the past that have been done plenty of times. And again, this is why I'm talking about the importance of a new chairman for the SEC. Because the FTD issues has been something that has been extremely large for AMC and for GME. And we definitely have already talked about how that's extremely shady. And we need to bring fairness, we need to bring kind of the regulations that we've always wished for that. More so in terms of understanding what everyone's feeling about AMC and GME. You can see here, hedge funds like Vanguard and BlackRock have reported today and yesterday that they've increased their positions in AMC stocks and GameStop stock hundreds of percentages. We also see how Bitcoin has hit new all-time highs yesterday of 93.6 thousand per BTC. Let me talk about why this is important. The fact that Vanguard and BlackRock are buying into AMC and GME should give you an indication of what kind of the prospective outlook is for AMC and for GME. It shows you that not only are institutions willing to buy in, they're willing to buy in large. Now, bear in mind, Vanguard and BlackRock aren't the only institutions. We're seeing institutional ownership for AMC and GME to be going up almost every single quarter now, almost every single month. that should be the biggest indication that people sees the potential for AMC and GME. Now, in terms of Bitcoin hitting an all-time high, one of the reasons why I want to talk about this is obviously firstly relating to what we said at the start with the tokenizer of shares, where obviously we've seen firms involved in crypto, but it's also talk about the collaterals that we've mentioned in the past and how that could be of aid, but could also crush some short sellers as well. And guys, thanks for watching this video. I'll catch you guys next time.